All right. And we are live. So welcome back to Dapp University. So today we got a lot to talk about in our live stream. We're going to talk about a big DeFi act that just happened. It looks like it was about $182 million, if I'm seeing the number right here, stolen with a flash loan exploit. Okay, so we're going to talk about that in this video. We're going to look at the transactions, actually break that down, see what happened, because it looks like the attacker is still on the move, trying to move some money around, and there's lots of suspense about what's going to happen next. All right, we're going to look at that. We're going to look a lot of other news updates that have happened since our live stream we did on Friday. Again, we do these live streams Monday through Friday. Just subscribe, turn on notifications. You're going to find out about those whenever we go live. We're going to take a quick look at the crypto markets, answer some of your questions in the replay here, and a whole lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. All right, so we got people jumping in the chat here. We got Culturized, Technically, CodeChat, Venture Warrior, Dappmaster, Machiavelli, ENIAC, Ahmed, Heathen American, Wine. Welcome, welcome, welcome. All right, so let's jump into this. Let's look at this big DeFi hack that just happened. Okay, so $182 million stolen. All right, so I'm going to pull up a really quick article to get a summary of what happened here, and then we'll actually look at the transactions to see, the particulars and actually look at the on-chain activity to see what's going to happen next. Okay, so let me pull this up on my screen, see if you can see this okay. So attacker drains $182 million from Beanstalk stablecoin protocol over the weekend. Okay, so what is this? So let's just take a look here. The flash loan becomes the second 9-figure DeFi exploit in the past month. Of course, we saw this just a few weeks ago. We saw the Ronin Bridge exploit was like $600 million. It was the largest DeFi exploit, I think, okay, looking at all the past history of everything that I've seen, the largest DeFi exploit to date. Of course, that's not this one that I'm talking about, the one that happened a couple weeks ago. But now we're seeing another one happen really soon after, which is not as big as $600 million, but close. Okay. So anyways, so Beanstalk Farms, an Ethereum-based stablecoin protocol, was exploited for $182 million. Okay. The attacker was flagged on Twitter by blockchain security firm PeckShield, which said the attacker made away with at least $80 million in crypto, although the losses suffered by the protocol were much larger. Okay. So the market for Beanstalk stablecoin collapsed as a result of the attack. At press time, the token was down 86% from its $1 peg, according to CoinGecko. Okay. So let's actually look at some of the transactions, because that's the crazy thing about this is whenever these things happen on chain, is like you have full access to all the data. All right, you have full access to all the blockchain activity and the transactions, so that you can actually see what happened in real time. And that's why you see these reports come out from these blockchain security firms, because they're watching this and they're saying like, hey, how can we do a post-mortem on this and educate the community on what happened so we can learn about it, but also try to, catch the attacker. We'll talk about that here in a minute. Like, there are many cases where the attackers are brought to justice because like they're trying to take off with the money. Like people think it's you can just get off scot-free by doing things like this in the blockchain. But the real truth is like, we can see everything you're doing, and sure, there's lots of attackers who are pretty sophisticated, but there's also a lot of security people who are highly sophisticated as well, who can easily track everything that's happening on chain to catch people who did this. So anyways, let's take a look at the transactions. So the Beanstalk Farms application exploited in a flurry of transactions, leading to a gain of $80 million for the attacker, including 24,830 ETH and 36 million beans, a combination of Ether and also the cryptocurrency associated with the Beanstalk project. Okay, so this hack was made possible due to the flash loan assisted, immediate pass of BIP18, which was submitted 1 day ago. So basically, what happened is the attacker used a flash loan to help create a governance proposal that would essentially pay them these tokens. That's what it looks like here. And then basically was able to make this pass. Okay. You can actually see the breakdown of the transactions right here. And they did that. Let's actually look at some of the articles. I think it explains that point a little bit better. Let me just see here. Yeah, so basically, we're seeing how it was carried out, but basically the attacker obtained governance tokens, okay, accumulated governance tokens obtained through a flash loan to create a fake protocol improvement proposal to gift funds held in Beanstalk to an address used to raise donations for the government of Ukraine. Okay, and then basically we're able to access, the funds that way as well. All right, so let's continue on with the analysis here. So we can see basically all the steps involved in this right here, okay? Based on these Etherscan transactions, we can pull these up here. So we can see that a malicious proposal was proposed and executed, and they were able to accumulate all the tokens with flash loans basically to make this pass. You can see all those actually on chain right here. Now, you're not going to be able to see all this on Etherscan, but that's, you can see all the input data here. That's exactly what you're able to see with these advanced analytic tools that actually go through the instructions that happen with the Ethereum virtual machine. Okay, let me see if I can actually pull this on my screen. Sometimes you'll see, I want to see how can you analyze, specific transactions this way. Let me see if I can pull it up with a tool right now. Let's see here. Yeah. Okay, so my tool's not actually currently working, but you can pipe these transactions into different, tools that actually analyze the instructions at the EVM level, and that will help you reproduce the same type of insights that you see here with PeckShield, where if you don't see all the steps on Etherscan, you can break them down even further with a tool like this. Okay. All right, so let's talk about some of the implications of this, because now what's happening is essentially the attacker is, got the funds and they're trying to move them around with Tornado Cash, okay? So if you're not familiar with what Tornado Cash is as a privacy solution for Ethereum, let me just pull up their address and you can see what's happening. So basically, if you look at any of those reports, you can see the attacker's address here on Etherscan. If you look at their transactions, okay, you can see there's some spam communication coming into it. This happens a lot whenever somebody appears in the news. You see all these spam transactions come in, people advertise their own projects. But anyways, you can see that here's out. That's because basically they're trying to take the funds and move them through the Tornado Cash privacy solution. So what is Tornado Cash? So basically, it's basically a mixer. So what is that? Well, basically a mixer is something that is a way to try to implement privacy on top of something like Ethereum. So here, let's talk about problem solution format. So the problem with Ethereum transactions is of course, people think about blockchain transactions being anonymous. In one sense, they are. The better term is pseudonymous, or however you say that word. Pseudonym, not anon, but pseudonymous. So basically, you don't know who's behind an address necessarily. Like if you see your Ethereum address, it's just like a username. You don't necessarily know who has that username, but you can see all the activity tied to that particular username. So you're acting as that pseudonym online, but you can see all the activity associated with that, pseudonym. Okay. Now, sorry, my camera's messed up. How do you break that problem? How do you have a pseudonym online where you can't track all the activity for that particular, pseudonym? Well, that's where something like a mixer comes into play. So here's the wrong way to do it. The wrong way would be to create an entirely new wallet and then just send your money directly to that wallet and then start making other transactions there because, well, it's pretty obvious that you just took money out of one wallet and moved it to another and started doing transactions there. Okay, so if you, did something here and wanted to erase your history, you can't just send it straight to that wallet. Now, some people will say, well, I'll just send it to a cryptocurrency exchange, right? I'll just go on Binance and then fund my wallet and then I'll withdraw from Binance and then nobody can see what the two links to those wallets are. That's not going to work either if you're doing something nefarious, because if your address is blacklisted, guess what's going to happen? Binance is just going to, I'm not throwing Binance in the bus, any centralized cryptocurrency exchange who has to comply with the law would just freeze your funds automatically, and you wouldn't get them back. Your money would be gone. So what it looks like they're trying to do here is send funds to Tornado Cash. So how does that work? So Tornado Cash is a privacy solution. It's basically a mixer. So what's the solution there? So basically, you have this pool where lots of different people can deposit the exact same amount of cryptocurrency. Okay, and then you basically get this coupon essentially that's powered by zero knowledge cryptography that lets you prove that you have access to a certain amount of funds in that pool, but you don't necessarily have to know who deposited those funds, okay? And so on the other side, you can go withdraw. You have a claim ticket essentially for a certain amount of money that you can withdraw from that pool whenever you want to. So it looks like this. Basically, you have let's say you have 1,000 people, depositing the exact same amount of cryptocurrency into a pool. And then later, those same, you don't know, it could be with a brand new address. Other people have the claim ticket and they can just go withdraw the exact same amount of money. And you don't exactly know who, that was. That's a way to break the link between the two wallets. Okay. Now, you could say that, well, probably whoever withdrew belonged to this set of 1,000 users or whatever it was to deposit in this pool, but it's still really hard to prove exactly who that is, right? Now, there are ways you could increase the likelihood of that. The more people deposit, though, the harder it is to prove, the different amounts, all that type of stuff, all the variables. As you increase the volume, it gets harder to tie an identity from a withdrawer to a depositor. So that's essentially how that works. And so that's what they're trying to do right now is sort of wash the funds through something like Tornado Cash. So we'll see how successful this is. Now let's talk about a couple of things like flash loans, because this always comes up whenever we have these types of exploits. People talk about are flash loans bad, right? Are they a net negative for the crypto space? Should we just ban them? So here's my take on this. Flash loans, here's the thing. DeFi is one of those things that's going to get exploited without flash loans, okay? So here's the thing. Somebody could essentially have done the exact same thing if they just had enough money to exploit this protocol. They didn't have to have a flash loan. The flash loan just gave them enough money to essentially do this. Now, the counter argument to that is, well, it makes it a lot easier for somebody to not have enough money to exploit the protocol because, not that many people in their right mind are going to risk this much money to execute, something like this on chain. Think about the risk reward scenario available, in that situation, because you're risking, jail time. You're risking all this money. In this case, you're just taking money off the table and you're just risking jail time. So I get that, but part of this is just real world stress testing applications. I don't like the fact that these types of things happen. But I'm pretty realistic about the world that you and I live in, that there's basically impossible to eliminate bad actors from this just based on human nature. And so honestly, the really only way that this stuff's going to get stress tested in production is for these types of things to happen. And if we take flash loans away, then they're going to happen anyway. They'll probably happen less frequently, but that's also another problem, because think about how long you've had to what happens if DeFi gets a lot bigger and then, into a much more mainstream use case. You don't want to wait to that point for everything to get really, really, really stress tested. Okay. If anything, you want DeFi to get extremely stress tested right now when it's a bunch of people who are engaging in risky behavior already, hopefully most of them knowing what they're getting themselves into. And you kind of want some of these, Wild West instruments of the trade to be there, in my opinion, during this phase now and not show up later to pose an existential threat to something that has not yet been tested with early, users. Okay. So that's my view on the flash loans. No, we should not take them away because they produce these, threats early on. Because there's so much also good stuff you could do with the flash loans too. Okay. This is definitely is a way that can be misused, in my opinion, to do things that shouldn't be done. But those things can be done even without the flash loans anyway. So that's my view on this. And the other thing about this is, like, we're talking about doing an exploit and moving funds around the blockchain. I mean, we can get here and just look at everything that's happening, right? The truth is, we'll see how this plays out in terms of what the exploiter is able to do with the money. Will they be tracked down? We might not know for some time. I mean, that's the crazy thing about some of these, exploits is so people might think they got away with it for a long time until, like, suddenly they don't, or suddenly they didn't. Sometimes you don't always find out, you get the instant feedback of knowing whether or not, the money was able to get away with. And sometimes we don't even know about it. Sometimes we don't get the closure. We don't get the post-mortem whenever somebody's brought to justice. Sometimes that can be even good, because sometimes, like, at the end of the day, like, people who, do stuff kind of like this, like, one of the things that they hope for is to get fame out of it. That's kind of like that limits their downside risk, even if they end up getting caught. Like, well, at least they got famous. So sometimes the best thing to do is, if they get caught, just, like, silently bring them to justice. I don't think that's going to happen, but we'll see. So anyways, like, moral of the story with a lot of this is, like, in my view, very few people are going to get away with it when they do this type of stuff. And it's just, I mean, I don't think you should do it in the first place, even if, not just because something bad's going to happen to you, right? I don't think, I don't want people to steal my money. I don't want other people to steal other people's money. But at the end of the day, like, there's so much downside risk for something like this. Like, you have to think about the incentives. There's so much incentives for people to recover, $200 million, basically. They can pay some of the smartest people on the face of the planet to track you down so fast. Like, it's not even funny. Somebody says Axie was first. Now they hacked this liquidity pool. Yeah, so Axie was the Ronin bridge. So the Ronin bridge exploit happened. We've seen lots of bridges, be victims of exploits. I mean, I still think there's a lot of potential for bridges and for cross-chain solutions. I just put out a video last week talking about, how I think there's a big potential for cross-chain technology, but there is this early risk that we're having to work through right now. Has been watching the channel for a month and just landed a 6-figure blockchain job. Awesome. Congratulations. Smez's cross-chain would have more security risks. Yeah, totally. With the current implementations, okay, so some cross-chain solutions that I'm particularly excited about long-term are ones that involve zero-knowledge-based cryptography, which, we'll have to wait and see what happens. But a lot of those hold promise to reduce the risks dramatically. All right, so let's take a quick look at, oh yeah, somebody says, is it true? Was there an attack by North Korea? So let's actually follow up on some of the Axie stuff. So we are seeing some resolution to some of the Axie stuff. So they said the Ronin Bridge exploit was initiated by North Korean hackers Lazarus. So I don't know if this ends up being true or not, but that's what the word on the street is. So U.S. Treasury Department has come to the conclusion. So U.S. Treasury Department. And alleged the North Korean hacking group Lazarus is linked to the Ronin Bridge exploit, which was worth more than $600 million to the Axie Infinity creators. So this is the previous exploit that we're talking about just a few weeks ago. Okay, So as of Thursday, the Treasury Department added a specific Ethereum wallet address to its sanctions. So we're seeing the sanction crackdown here. This came after Nansen labeled the address as one of the attackers within the bridge exploit. Soon after this, Chainalysis tweeted this address was involved in Ronin, etc. Finally, Ronin Network added to their blog to confirm the scenario. Okay, so we got the details on the exploit, but that's what they look like. They are attributing it to the North Korean hackers Lazarus. So we'll see. Because yeah, talking about getting away with it, like it's just way too much money for people to just forget about. Way too much money. Someone said Ronin got hit again. No, Ronin did not get hit again. It was a different project. This was Beanstalk. So Ronin, I was just following up because it's a related story. We've seen, several DeFi exploits within the, within the past month. And talking about what happens after, and just kind of doing a post-mortem on some updates that we saw with the Ronin bridge exploits. But yeah, we did have a new one with Beanstalk just happen. All right, so let's take a quick look at a couple other things here. Let's take a quick look at the crypto markets here. All right, so Bitcoin, we are back below $40,000. Okay, looks like we fell a little bit over the weekend. So basically, I think there's a lot of, I would say, trying to use the right word here. I think there's a lot of, but people are discouraged because we've been looking at a couple things here on the chart. Basically, over the past. It's been a fight for the past month or so, right? Of course, we've been pretty bearish since the beginning of the year, but we've been trying to get some relief out of this. All right, we kind of saw this pump. We were pushing for this 200-day moving average. A lot of people excited about that as a, getting past that to try to get confirmation of getting out of a bear market. Because if we can get above that 200-day moving average in the past, basically if we can break above it and hold it as support, then that makes things look a little bit more bullish. Now, we got rejected, okay? And, we've seen this line act as rejection in the previous, bear markets. So I say bear market. I mean, what we've been in since, November has been a bear market. I'm not saying it's like necessarily a crypto winter like we saw in 2018 and 19. I don't think that's what's happening here. I'll talk about that more in a minute. But yeah, in the short term, there's been a little bit of a bearish rejection. Of course, we're back below the bull market support band. We are below our 50-day moving averages. What we really want to see here is, in the very least, putting in a higher low here. All right, we're currently about to come back down to those previous lows, and then try to, make a slow grind higher. Now, what's interesting to see is right now we are seeing some green in the stock market. Okay, I mean just barely, really just barely. Okay, we're seeing a little bit of green and with riskier stuff with tech, kind of taking a look at the NASDAQ 100 as a proxy for that as well. So we'll see what happens with crypto, right? Can crypto follow? Can it keep up? I've long said since the beginning of the year, I think what we're seeing in crypto right now is not a crypto-specific problem. It's definitely got to do with everything that's going on with the macro scene, monetary policy, interest rates, uncertainty on with war in Europe, all that type of stuff, right? So, we're over with taxes should be done. All right. Hopefully today is our last day of going into tax selling. All right. So we'll see if that ends up playing out. We'll see if we can start putting in some bullish momentum for crypto. Spoiler alert: if you are new around here, my whole philosophy on this space, my thesis for what we do with crypto prices over the coming months and years, is that we are creating technology with real benefits, and as you have people using the technology because it generates demand for the technology and people start using it, and you have cryptocurrency associated with those projects, that the value can actually accrue to cryptocurrencies themselves because they have sound economics behind them. Okay, so we're talking about a technology that's getting a rapid adoption. Okay, and I do expect the cryptocurrency prices to track and follow that over the long term. Now, the short term, it's really hard to tell, right? Especially with all the uncertainty we have in sort of the macro scene. I don't pretend to be a macroeconomics expert by any stretch of the imagination, but it doesn't take a genius to notice that we're not in the best of times. I'll put it that way. Somebody says stop worrying about price action and get your career in gear. Yeah, totally. That's a great point, because at the end of the day, crypto's great. Crypto's a great way to multiply your wealth long term. Of course, not financial advice. That's just how I view it. Okay, the only way to really make it in crypto for most people is to just stay in the game for a long time. Okay. That's sort of the time in the market beats time in the market because of the adoption that I'm talking about. Now, that being said, for most people, like making that life change in crypto, definitely one of the best ways is to break into the industry. Blockchain is one of the highest paying fields in tech. We just saw somebody in the chat here talking about landing their first 6-figure job after watching the channel for a few months. Okay, so most people are looking to crypto to make that life change. Well, most people can make their life change in 2 ways. They can fix their cash flow problem now by basically getting a job that fixes that problem. Most people just don't feel like they got quite enough to accomplish their goals. And well, getting a different job can definitely fix that a lot faster than hitting the jackpot in crypto. And then also, a lot of people just don't like their job. They think it's boring. They hate it. They hate commuting. They hate doing all this type of stuff. And well, guess what? Blockchain's super exciting stuff to work on. It's remote friendly, so you don't have to do a commute. There's a lot of perks to it. Now, it's challenging work, but that's part of what makes it rewarding too. All right, everybody. So if you want to get started doing exactly what I'm talking about, changing your career, breaking into the space, how can you get started doing that? Well, you can definitely go to my YouTube homepage. You can find those free courses there. They're like Udemy courses, but they're totally free. The best ways to learn by doing, that's exactly what I teach you inside of there. And so if you like those videos and you want to take the next step, or hey, maybe you want to take a massive shortcut entirely, I can show you how to become a blockchain master step-by-step, start to finish, over at dappuniversity.com/bootcamp. Okay, you don't have to be an expert to get started today. You have to help people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. As always, like this video, subscribe, turn on notifications. You're going to find out about these live streams whenever we go live next. That'll be tomorrow. And until next time, thanks for watching.